Welcome back to our Monetary Policy Special. We are now joined by the biggest banker in the country, Mr. Dinesh Khara, Chairman at SBI. Mr. Khara, thank you very much, and thank you actually for unfailingly joining us in a Monetary Policy Special despite a very packed schedule, I'm told. Well, you know, the pointed thing I wanted to ask you is that they have upped the definition of wholesale deposits. Does that, I mean, it becomes 3 crore now, not 2 crore. Does it mean more expensive deposits? Do you think many banks could be hit?
First of all, thank you very much, Latha, for having me on your channel. When it comes to the revision in the bulk deposit definition, I think the intention is that when various banks are raising these bulk deposits, they should be mindful of the cost at which they are raising these deposits. So that is what the intention is. But I really don't know how many of the banks will really get affected, because each of the bank would have different threshold for the bulk deposit, and they are offering differential interest rate for the bulk deposit depending upon their ALM situations. So that's the intention, it seems, and nothing beyond that.
Only those people with a lot of large amount of bulk deposits will be squeezed. Otherwise, this is not really affecting the system, right?
Yeah, that is, and also it's not much of a difference. It is actually 2 crore to 3 crore.
Okay.
So I think I don't really see much in this.
Okay, then I won't waste time over it. The more important thing is the Reserve Bank is quite gung-ho on growth. They have upped the forecast. You are at a better position to judge the demand for credit. Do you think the economy is that robust? Because we saw credit growth actually falter a bit. If you adjust for the HDFC merger, it's actually the growth has fallen from about 16% plus that it was earlier in the year to about 15 point something. Is growth?
I think this kind of aberrations are quite normal. These are the difference. The credit pickup at times depends upon the actual economic activity on the ground. So we also observe that when it comes to the GDP growth, we have invariably seen that we normally get to see higher GDP growth in the later quarters, and as compared to the earlier quarters in the financial year. So I think this marginal difference here and there in terms of the GDP growth will also impact the credit growth. And as you mentioned, that it's about 0.5% difference what you are mentioning in terms of the credit growth.
Yeah.
So I would rather say that the growth projections which have been indicated by RBI, they are actually based upon what they have seen in the previous year and how it is really evolving in the current year. So that is something which seems to be the guiding factor for revising the growth projections.
You speak to a wide range of borrowers, private sector borrowers, infrastructure guys, public sector guys as well. Are you getting a sense that the Capex cycle is well and truly up? Is there those animal spirits there to believe that we are in a good Capex cycle?
No, I would say that yes, because considering the pipeline which we have for the mid-corporate and large corporate projects.
Okay.
So that is a very clear reflection that we don't see the demand tapering off. So it's quite, I would say that it is actually quite encouraging to see this kind of a pipeline.
Okay. And what about the RBI not changing its cost of credit, repo rate retained at 6.5%? You see that as an impediment? The best guess, according to economists, is that they may cut perhaps in the last quarter of the calendar. That's, the third quarter.
Yeah, even our expectation is also somewhere around the same time. We are expecting the interest rate reduction around the same time, because as we have observed from the past, in the past also, RBI is very clearly and very closely looking at various data points, and they are looking at the inflation trajectory. And we are quite hopeful that this monsoon season perhaps will get to see better performance of monsoon in the country, and which will also lead to the inflation getting recalibrated to the levels which RBI would be comfortable. So all these factors, to my mind, will lead to some kind of a interest rate readjustment. And also the way the governor has indicated today, the way and also the the kind of trends which you're observing across various central banks.
Okay.
Perhaps in the past also we have seen that the RBI has decoupled itself and they have addressed the economy's concern only. And I think based upon that, if the inflation comes within the range which they are hoping to see, most likely in the third quarter, we are also hoping that there should be some kind of interest rate cut.
Okay.
And its overall impact on the sentiments of borrowers to really go ahead with their projects, I don't really see much of a impact of this kind of interest rate would not have so much of impact for a promoter to pursue their
point.
Project.
Yeah, if there is an animal spirit, then the cost of money, whether it's 6.5 or 6, shouldn't make a difference.
Yeah.
Point taken, sir. Finally, the political setup will determine the animal spirits as well. Would you worry that it's not exactly as it was in the last 5 years? Will that put some brakes to the Capex cycle, some hesitation for new investments?
As far as I'm concerned, I don't see any kind of a hesitation in the mind of the investors. So I think the complexion will be more or less the same.
Okay. All right. On that optimistic note, Mr. Khara, thank you very much indeed for joining us. Key takeaways from our economists and the top banker is that growth looks fairly robust. The Reserve Bank has put its seal of approval on that. Well, we'll have to wait, of course, a bit on whether they will have the courage to reduce the interest rates. Looks like we have to wait for the end of the year for that. All eyes now will shift, of course, to Delhi and to the budget. Thank you very much for joining this Monetary Policy Special.